Hi, and welcome to xElle Ventures Intro to Angel Investing. Who is this video for? First of all, it's the first in a series of videos about angel investing. And these videos are for current women investors who want a refresher or just want to learn a little bit more. For women who are thinking about it, contemplating becoming an angel investor. And for female entrepreneurs who are thinking about raising money or are currently raising money and want to know a little bit more about angel investing. And so we also want them to be ready to be angel investors when they exit their company. Who am I? My name is Robbie Hardy, and I'm the founder and chair of xElle Ventures, and we are a women's angel network focused on women-led ventures. I've been an angel investor since 1995. I became an angel investor after I had raised money for my own company. And you learn a lot on that journey, but I only knew one side of the table and I wanted to know the other. And I also wanted to be able to pay it forward. So in 2000, being the entrepreneur that I am, I decided that I should be able to have an angel fund too. So I raised an angel fund called the Atlantis Group that was originally intended to be for women only. But it didn't quite work out that way. We're a little early, but nevertheless, it happened, it was successful, and all was well. And now we are here in 2020, and we have a women's angel network in the Triangle investing in women-led ventures. But I can tell you that I have always been one of the few women, and I have a huge passion for empowering women on all sides of the desk, on the side of the entrepreneur and on the side of the investor. So I would love to be one of many women angel investors alongside you. So let's talk about women. You know, women rock. I mean, we're the majority of the population. We're the majority of everything. You know, we have a lot of businesses. We have a lot of successful businesses, and our businesses grow. But yet, somehow, we don't get the money. Where's the money? We only get 2 to 2.5% of all the money invested. We're barely represented in the angel side also, or the venture side, only 0.5% of high net worth women, yet 30% of high net worth men. So I think it's time to do something about that. Because women angel investors are really essential. We need people on both sides of the desk, as the entrepreneur and as the angel. And when I say people, I mean women. Women are people. Anyway, I think that balance is really, really critical. And we know that women who get funded have so much better chance of being wildly successful than those who struggle to raise money. Because access to capital is really a gating factor for women-owned businesses. So I ask myself, and you might too, what keeps women from investing, from angel investing? And I think it's because women are smart and they want to understand what they're doing. They want to know as much as they can about a venture that they jump into. And so what happens, I think, and it happened to me in 1995 when I first became an angel investor, was I thought, you know, this is a little intimidating. I don't really know what this is all about. I understand on the entrepreneur side, but I don't understand from the investor side. And what I realized is that angel investing is just like every other industry. It's full of jargon and lingo and acronyms. And I just needed to learn how that worked. And that's what you need to learn too. And it's actually not very complicated. And it is all about, you know, knowing what's behind those terms and what they mean and how to use them, et cetera, et cetera. So while angel investing is high risk, it's also potentially high reward. So become an angel investor, you can decide how much of your portfolio you'd like to put towards investing in startup companies. So who is an angel investor? It's interesting that the term angel came about from Broadway, where people put money behind various producers, I guess. They were producers and they were backing directors and actors to put on Broadway shows. And so the conversation was they had an angel on their shoulder helping them get where they were needing to go. And that term angel has come all the way forward and morphed into the angel investor we know today. And angel investors generally invest in what they know, the businesses they know, the type of industry, or they invest alongside other investors who might know businesses that they don't know. So they become part of an angel network, an angel fund, or they may decide to invest by themselves. There's also venture capitalists. And venture capitalists, it tends to be bigger money and more professionally run because people are paid to run the venture capital fund. And so venture capital investors are wealthy individuals, and I was going to say high net worth individuals, they're that too, and institutions like pension funds, etc. And there's a venture capital firm, a VC firm, that manages the money and chooses the investments. So in a venture capital firm, you have those that are running the company, and they're the general partners, and then you have the wealthy individuals and the institutions, and they're the limited partners. So see, now there's some jargon you probably didn't know before now. The other thing is that most angel funds and networks are comprised of accredited investor. And so what does it mean to be an accredited investor? It means $200,000 a year as an individual, or $300,000 with your spouse, or a net worth of $1 million or more, not including your house. It's actually pretty straightforward. So we talked a little bit, or I mentioned before, about angel funds or angel networks, and what's the difference between them? And really, it's quite simple. In an angel fund, all the money is pooled into one fund, one account, so to speak, and that account invests in the various startups. In an angel network, the members come together in the network and look at deals and try to figure out what's the best, is it the right deal to take forward or not, but each angel makes their own decision. So decides whether to invest in the deal and or how much to invest. So that's the difference. You know, some people say, I don't have time to be an angel investor, and that's okay, because you know, you can do as little as write a check all the way up to taking a board seat. It's really your choice. And interestingly enough, some of the simplest things that don't take very much time are often the most advantageous to the entrepreneur, and that's the use of your network. Sometimes you may know someone who's in the industry that you have invested in, and you might maybe be able to make an introduction for that entrepreneur that could make a huge difference for them going forward. So let's look at the types of investing that there are. There are many, but for this purpose, let's talk about the three most common. The first one I bring up is debt, because it's a loan, and we all understand how loans work. So the fund or the network loans money to an entrepreneur for a certain period of time at a certain rate at a certain payback. Do they pay it back monthly, quarterly, annually? Is the term a year, 2 years, 3 years? It's pretty straightforward. What you hear about a lot is equity investing, and that's where the entrepreneur has shares in the company and the investor buys the shares, so their money, their capital is traded for shares in the company. And then there's convertible debt, which is really in the beginning a loan, but it's really headed to be an equity investment. And the convertible debt happens because perhaps there's a milestone waiting to be met. There's some issue or opportunity that needs to be met before the money can convert to an equity. Otherwise, it stays as debt. Once that milestone is met, then the debt is converted into equity. So the angel investing process just has a few steps to it. Some of them can be longer than others. And one of the first steps is sharing with your colleagues and your friends and your family that you're an angel investor now and that you're part of this fund or network, or you're just doing it on your own. So then they meet entrepreneurs, they might share that with them. This is a possible source, and that provides deal flow. And you also keep your eyes open for people you might meet who may be potential entrepreneurs that you might be able to look at for investment. So as that word gets spread around, and it happens pretty quickly actually, the next step is entrepreneurs either find your venture, like finding xElle Ventures, and they apply, they look at the criteria, they fill out the application with information about their business and their pitch deck. And then there is a screening committee that steps in once those applications have been reviewed by an administrator to make sure, for example, in the case of xElle, that it is a North Carolina company, it's women-led, and a few other criteria, and then they say, okay, this one's good. We'll send this to the screening committee, and the others will get a note saying, unfortunately, you don't fit our criteria. So the screening committee is made up of members, and there is a chair for the screening committee. And the screening committee digs a little bit deeper into the company, and they make sure that, there's things appear to be reasonably sound. We're not going into a lot of detail here, but just kind of giving those documents an overview, and also inviting the entrepreneur to present and go through a Q&A session with the screening committee. So through that work that they do looking at the company and through the screening process of having them present, then the screening committee votes and makes a recommendation. Do you take this forward, or does the entrepreneur, is it too early? Do they need to come back at a later time? Is it just not a fit? There's a variety of potential outcomes. But let's assume for this purpose that the screening committee says, yes, let's go forward. Let's have them present to the membership. So the entrepreneur is invited to present to the membership, and it's a high level overview of the company, and there's a Q&A session for the members to ask questions. And then there's a vote. Does this look like a company we would like to know more about? Does this look like a company that we might be interested in investing in? We don't know enough today, but we think it looks pretty interesting. We think the entrepreneur looks pretty interesting. So let's take it through due diligence. And the due diligence committee, again, is made up of members of the network or fund, and they dig much deeper into all aspects of the business. And each member of the committee is assigned a different, like if you're an accountant, then you would be, you'd say, I'll look at the financials. And if you were a marketing person, you'd look at that. So you get to lend your expertise in the due diligence process. Sometimes the entrepreneur is asked for more information. There's dialogue back and forth, and the due diligence committee comes together and votes whether or not this company really has met their expectations and is ready to either go forward as a potential investment, or perhaps it's just too early again, or the numbers or something don't really make sense, and so we don't make a recommendation. So assuming that it goes forward, then it's brought to the members to say, okay, we think this is a really good opportunity, depending on if it's fund or the network. Just people can make decisions about how much to invest, et cetera, but they don't do that without seeing a term sheet. And a term sheet is drafted based on the conversations that have taken place between screening, due diligence, membership, and perhaps the member who sponsored the company to present in the first place. And the term sheet is non-binding, but it's a place that we begin to start the negotiation process, and it's a place where investors can look to see if they're interested in investing. So that's a high-level overview of angel investing. Please send any questions and comments to investher@xelleventures.com. And the next steps, we say, is there's going to be future videos on screening, due diligence, financials, and term sheets. And in term sheets, we may cover a lot of different things. So I thank you for your time, and I so hope you have a great day. Thank you.